Good morning, everyone, and welcome to the PivotBoss pre-market video for Monday, December 3rd, 2018. Happy Monday, everyone. I am Frank Ochoa, aka PivotBoss, and I want to invite you later on this afternoon to our monthly market outlook for the month of December, the last trading month of the year here. We're going to cover longer-term outlook for the various markets. We're also going to prospect for some year-end candidates. That will be at 3:30 p.m. Central. This afternoon after the market closes. Again, please join me. We will talk all things stock market here and take your requests as well. Starting off things right now with the ES, what you'll notice is we've gotten a push right back toward recent highs. This is something we talked about back when we sold off away from the FOMC key level on November 8th, dropped away from it here. We mentioned if prices can find a low here, we can reverse right back to that level. This morning is the time where we hit that level, or overnight trading, where we finally come back to that level, and that's one of the key trades we usually look for. And it's something we hadn't seen here the last time. When we got the FOMC key level in September, this thing sold off right here, failed to get back to it, and that led to more weakness. When this one came around, we dropped, rejected, and came back to it now. So we've completed that move here. But do we go further to the upside, or is this it? Is this it? Are we about to see another drop back down? I mentioned to our traders here that I did think that we had a high probability of getting to the edge, but getting above 28.25, that's another story. If we can get above 28.25 and hold, then perhaps we can then see a move back toward recent highs here and trade between 28.25 and 29.70, right? 29.50, somewhere in that zone. Until we can do that, though, we could be headed right back down and worse. And so the best case scenario would be to push through this level and hold 28.25. Otherwise, again, we could be filling this gap and working our way right back down to recent support. And so if that were to be the case, again, triple bottoms, very rare. It would have to be a trading range in order to bring it back up, because if this thing comes back and fails, we are now headed for another big leg down. So right now, it's still not out of the danger zone at all. You can see back here for the beginning of the year, really this whole zone has been resistance throughout much of the year. That has been resistance. The one time we got above it was late this summer, and then we failed spectacularly. So right here, we're right back at that zone that has been resistance throughout the year. This is a good spot to take some profits on partial, on something that you have gotten in down here. For example, we've had some trades that we've picked up from down here back up. Those are short-term swings, and this would be a great spot to take some off there. But if price can push through 28.25, again, it opens up some year-end strength. But again, we have to see if the market can hold those gains after the gap up that we're going to see here. Now, if we take a look at the NQ, very similar price action. Let's bring that up here. You'll see again a nice bounce back up. This one took out recent lows and then squeezed back up. We've had lower highs on this one, and we come just shy of reaching the FOMC key level at 71.68. That's a level that could be still reached, but again, is the market going to hold these gains, or are we going to see another drop back down to recent lows? So the recent behavior for this one has been obviously kind of a downtrending type of channel. Again, we're kind of up against a major area of resistance, and so if you bring this back to the beginning of the year, anything 7,200, for example, that's been the zone, where the market has dropped away from it. We held above it for one period of time until we failed, and now here we are again. So again, the market needs to be able to get above 7,200 and hold, 7,250 and hold. Otherwise, we could be coming right back down, and these early year lows may still be vulnerable here, whether it be this year, perhaps not, or early next year, perhaps so. Those yearly lows that we saw earlier this year may still be tested here sometime down the road. But again, we have to see if the market can hold these gains. Otherwise, we could be looking at a gap fill and perhaps a pullback to begin the early part of December, and then we have to see what happens from there, because any higher low could be bullish into the end of the year. So we got to see how this thing plays out. Cautiously optimistic here, but again, any signs of failure could begin to fill this gap back down. So if we take a look here at crude oil, this one's up nearly 4% right now. Very, very bullish. And overnight trading was up much more than that. But as you can see right here, a very clearly defined downtrend that we've seen since the 77 highs. You can see that we have pushed into the trigger zone, the bearish trigger zone here for the PIMAs. That's typically an opportunity to sell. If price cannot hold above the midpoint of the day, that could be very significant. Again, if you look at the 2-month lower relationship here of the pivot range, any bounce into the pivot range is typically seen as a selling opportunity for a continuation down. Now, we don't have to go straight down in this one because of how far we have dropped here. This could certainly give us a sideways range with the wider trading range, pivot range that we see here. We could go sideways for a while. It doesn't have to go down, but it's going to take a lot to get this thing back up. We could easily bounce as high as 55s, which is what I mentioned before. If we get above 52.5 and hold, 55 could be in the cards, but then that could be an opportunity to sell it right back down. So 55 is big time. Got to be able to get above that if it's going to stage a larger recovery. Otherwise, this again could be a pop that gets sold. So be careful and cautious in crude, as this pop again could be a gap fill ahead and a continuation unless it can continue to hold 52.5 and start to chisel through 55s. Taking a look now, let's look at the YM here. The YM is also pushing back up. This one has been much more bullish. It is very, very close to the highs here, but we are coming into an area again that has been hard sold. The 26,250, very, very important. You can see here, price held above it, boom, offered. When it came back to it, offered. And now when it's coming back again, it shows that perhaps we could see some weakness with the little tail here at the top end of the range. We will see how this plays out. But again, if price cannot find a way to push through 26,250, then we may be looking at a fill back down and some pullback of some magnitude. So keep that in mind. All right, that is it for now. We will see how this plays out heading into the new week of trading and the new month of trading. Please join me later on this afternoon at 3:30 p.m. Central for the PivotBoss Monthly Outlook, and we will talk futures, stocks, and longer-term opportunities. All right, everyone, have a fantastic rest of your day, and I will see you soon. Take care.